For decades, making money in Japanese real estate was a pretty straightforward game. But as we start looking ahead to 2026, well, that whole formula is starting to break. The rules are changing, and today we're going to break down the new ones you absolutely need to know.
And wow, this one sentence from a recent Nomura Outlook report, it pretty much says it all, doesn't it? The era of just coasting along, where you could buy a property and watch its value climb, that's officially coming to a close. Something fundamental is shifting under our feet.
So that's the billion-dollar question, right? If the old way of doing things is broken, what's next? Is the whole market about to crash, or is something else going on? Over the next few minutes, we're going to unpack the 3 new rules that really give us the answer.
Okay, so first things first, let's be clear. This isn't about some big market collapse. What we're entering is a period of quiet selection. The market as a whole is expected to be pretty stable, but underneath that calm surface, a huge divide is opening up between the winners and the losers.
Yeah, the big idea here is that the old saying, "a rising tide lifts all boats," that's just not true anymore. Success from here on out is going to depend way more on how well you can navigate this new, trickier environment. Knowing these new rules isn't just a nice-to-have, it's absolutely essential.
All right, let's get into rule number 1, and this is the big one. After what feels like forever, decades of deflation and interest rates at basically zero, Japan is stepping back into a world where money actually costs something.
You see, for years, this financial leverage effect was basically the engine driving the entire market. Borrowing money was just so cheap, it made it easy to get deals done and really pump up the profits. Well, that engine is seriously running out of gas.
Think about it. In the old days, you could take a little bit of cash, borrow a ton of super cheap money, and control a massive asset. But in this new reality, that whole equation gets flipped on its head. With borrowing costs going up, what really matters is having strong, reliable cash flow coming in. It's not just about the asset's price tag anymore.
And look, this isn't just some abstract theory for the distant future. The consensus in the market is that the Bank of Japan's policy rate is going to hit around 0.75% by early 2026. Now, I know, that might not sound like a huge number, but when you're coming from basically zero, it's a seismic shift for a market built on a foundation of cheap debt.
Okay, so that leads us right into rule number 2. The return of inflation and wages going up, it isn't lifting everybody equally. In fact, it's creating this huge divide, literally splitting the market in two. So there's this key economic concept at play right now: G is greater than R. All that really means is that the economy is growing faster than interest rates are rising. This creates a really interesting opportunity, but there's a catch. The catch is you only win if your asset's income, like rent, can actually keep up and grow with the rest of the economy. And this, right here, is where that quiet selection we talked about becomes crystal clear. The winning assets are going to be the ones with pricing power, the ones that can pass rising costs, like inflation, on to their tenants with higher rents. But on the flip side, if an asset can't do that, it has to eat those costs, and that just squeezes its income, plain and simple.
All right, this brings us to rule number 3, and this one is all about geography. These huge global trends that are happening right now, they're totally rewriting the rulebook on what we even consider a prime location in Japan. First off, the AI explosion. This isn't just some software thing, it requires a ton of physical hardware and infrastructure. We're seeing this massive demand for data centers, and the real prize isn't being in a cool neighborhood, it's having access to enormous amounts of power. And that's creating incredible value in places that are nowhere near the traditional city centers.
Next up, let's talk geopolitics. As global supply chains get more complicated and, frankly, less reliable, there's a huge push for more domestic production here in Japan, especially for essential things like semiconductors. This is firing up a huge sustained demand for new logistics hubs and factories in very specific industrial zones.
And finally, something closer to home, Japan's massive labor shortage. This is creating a real need for a completely new kind of real estate: modern, highly automated buildings that help companies get more done with fewer people.
But hey, it's not all about new frontiers and opportunities. These same global forces are also creating new risks. For example, sectors like tourism are way more volatile now due to international tensions. And foreign capital isn't just throwing money at anything anymore. It's getting way more selective, really zeroing in on top-quality assets that are sheltered from these new kinds of risk.
So, okay, when you put all these pieces together, the rising cost of money, the divide caused by inflation, and the new map of what's valuable, it all points to one massive takeaway. The whole engine of value has fundamentally shifted. It's moved away from the world of finance and into the world of real-world operations.
You know, the old game was all about financial engineering. It was about being a wizard with spreadsheets and using cheap debt. But the future is a game of operational skill. It's about actually managing buildings well, keeping tenants happy, and finding ways to boost rent in the real world. The value isn't in the fancy financing anymore, it's in the actual building and how well it's run.
So what's the new playbook? Well, it's pretty simple to understand, but it's definitely not easy to execute. Step 1. Just accept it. The age of easy, passive returns is gone. Step 2. Recognize that real operational skill is what matters now. And step 3. You got to change your whole mindset. It's not about passively waiting for an asset's value to go up, it's about actively getting in there and making it more valuable.
And that brings us right back to the beginning, to this idea of a quiet selection. In this new world, winning isn't about finding the cheapest loan, it's about genuine skill. The question isn't just if you own real estate anymore. The real question is, how good are you at actually operating it?
And that's our look at the new rules of the game for Japanese real estate. Hey, if you found this explainer helpful, do us a favor and hit that like button and subscribe for more. Thanks for watching.